Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I'm going to talk to someone from my hometown today, back in India. He's an engineer, investor, syndicator, as well as a builder. His name is Ted Patel. He's the founder and CEO of Astre Capital. He has over 10 plus years of experience in real estate investing and started his real estate journey by doing fix and flips, new construction projects, and investing in small multifamily. So welcome, Ted.
Thanks for having me. Thank you all.
Absolutely. So we start with this question with every guest. Tell us something interesting or funny about yourself.
All right. So interesting and funny. I'm not that funny guy, frankly speaking, but yeah, I'll tell you something interesting. You mentioned I'm an engineer, right?
Yes.
So back in 2000, I came to US to do my master's in computer science. But after I completed a master's, I have never written a single line of code, computer code.
At least I did after finishing my master's. That's funny.
Yeah, yeah, because I always wanted to do business administration, but somehow, I got into this. I did my bachelor's in electronics back in India.
Okay.
And at that time, in 2000, there was a boom in IT, .com bubble. And so I got drawn into doing my master's, but because I was least interested in, coding, I switched my career as soon as I got out of the college. I switched my career to business. I did business analysis, but not coding.
Okay.
Yeah.
That's funny as well, not only interesting. So let's talk about, because our show is about building wealth, and we of course focus a lot on real estate. What was your first investment and how did it work out for you?
Okay, so the first investment I did was back in 2013. I was new to the real estate world, during that period. So I started looking at, some good deals. The first deal that I bought was from the sheriff's sale, Foreclosure in Jersey. Yes.
That was the first one, huh?
That was the first one. Yeah, I took my chances, because I got to start somewhere,
Right.
So I did my research. I started, that was a 3-family that I bought earlier. And the interesting thing about it is, after I won the bid from the auction, I did an inspection on the property. And we found there was an underground oil tank in the property.
Oh.
Okay. So because this was my first deal, right? So I was like a little hesitant. Like I was like, what if there is a ground leak? I should return this property back to the sheriff. I should dispute it, get my attorney involved, and return it. But then I thought, let's take a chance. Let me invest some more into the inspection. Let me get the environmental company come in, do the soil testing and everything where the tank is. So I was able to do that and got the results back. They said, there's no soil contamination. So I said, all right, let me take my chances now. I bought the property, and it came out to be a good deal, actually. I made a really good profit on that property. I bought it for $150K at that point of time, 3-unit. And after the renovation, everything, pretty, the value was about 500 in the Jersey City area. Yeah.
Oh, that's nice.
Yeah. At that period, right? Around
that period was
13 to
time.
17, you were able to scoop up really good deals.
Right.
Yeah. So that was pretty interesting. First deal, it was, a challenging for me because I haven't dealt with these kind of issues before, but got over it and came out good.
Oh, that's awesome. So if first deal itself, you bought it from sheriff sale. So it seems
Yes.
you you got started with foreclosures, short sales, etc. So
Yeah,
can you
I
explain? Go ahead.
yeah, I when I wanted to go in the real estate, I looked at the market, right? And then I studied this thing. I was going to sheriff sale just to watch people. I studied people, how it works for like 2 to 3 months. And then I just dipped into it. Yeah.
Interesting. So can you explain my listeners what is a foreclosure?
Okay. The foreclosure is a legal action that the bank takes against the mortgager if they are late on their payments, the mortgage payments. So initially what they do is they serve a lease pendants. After you fall behind on the mortgage, they serve a lease pendants, which is like a notice uh, to the owner that we are going to start the foreclosure process on you. So once they start the foreclosure process, and once the judgment is approved uh, about a certain amount which is due to the lender, they might start. They have a right to sell that property to the highest bidder. The bank once the foreclosure property process has been started, uh, they will schedule some dates uh, depending on which state you are in. Normally, the sale takes place at the courthouse, and they will schedule the dates, and there the lender will sell the property to the highest bidder. So that's how it works.
Oh, that makes sense. So do you see, and we were discussing about this earlier as well before we started recording, do you see foreclosures happening right now? The market has peaked as of last year. And of course, there are not many, but what are you seeing in the market now?
Compared to 2019 and 20, I as well as 21, I would say I have seen a little pickup in the market recently. 22, 23, I've seen number of foreclosures a little higher than what it used to be. And I think it's going to grow based on the current economy situation where the interest rates are going have peaked up, and there would be many homeowners which might get underwater uh, based on their loan terms and conditions. If they are floating interest rates, they might get into trouble, and we might see more foreclosures coming in the market.
Let's keep our fingers crossed. So
Yeah.
let's talk about. I want to understand, and I have never bought one property in foreclosure. I have bought a short sale before.
Mhm.
How do you buy real estate while it's in foreclosure? What's this process?
Okay, so there is a little period, right? Once the property is marked for foreclosure, before it gets auctioned, what you can do is you can approach the owner directly. Okay, there are two things that you can do. First is see what is the judgment amount. Judgment amount means what is the price or the amount due to the bank, which includes interest, principal, everything, the legal fees, everything.
Got
That's
it.
the judgment amount, right? So if the judgment amount is less than the market price of the property, you can approach the owner directly, sign a contract, pay the price what above the judgment amount, which goes directly to the bank, and you can buy the property. But in the other case, when the judgment amount is higher than the market value, then you might have to you might have to start a process of short sale, where you convince the owner you're going to buy at certain discounted rate, and then you'll have to work with the bank to discount their price.
I
Yep.
see. So even when the property is in foreclosure, you can go back and do the short sale?
Yes, and you have time until the auction date.
I see.
Before the auction date, if you get into an agreement, either with of course, the bank needs to be in agreement. You can tell the judge, okay, we are in contract, the bank is in agreement, they will reschedule the auction date, and you will get enough time to close on the property.
Got it. Okay. No, that's interesting. And but if the judgment is lower than the market price, then you don't even have to involve the bank and you can directly buy it from the seller.
No, bank involvement will come, but it would
Okay.
be the easy transaction, right?
I
Because you
see.
have the contract, bank needs, let's say a bank needs 200,000. You are paying the owner 250,000. So the 200, while at the closing, the 200,000 that's due to the bank goes directly from the escrow to them. So they don't want to foreclose unless and until they get their money.
Right, of course. No one wants to
Yeah.
go through that process, right?
Yeah.
No, that
So that makes the transaction a little easy. But sometimes what happens is the owner, okay, this is an interesting thing. The owner might see, okay, my market value, let's say the judgment is 200K. The market value of the property is 300. And the person coming to them, he's asking like, can you sell me the property for 225? The owner sometimes might not agree to it because they might think in the auction, they will get a better price than
right.
225. Okay. They might get 275. Let's say they get 275 in the auction. So what happens is the difference between the judgment and the auction price, the owner gets that price. So sometimes they might not be interested in selling directly to
I
you.
see.
They might
I
take
see.
their chance.
And no, that's pretty interesting. And let's say the short sale doesn't work, or and the seller wants it to go to the auction. What is the process usually? And I'm pretty sure the auction process is different in each state or county, but it's pretty much you just go there and start bidding, or is there any due
Yeah.
diligence you can do?
So of course, all the properties that are due for auction for a particular day, you will be able to check them out on the county website. The foreclosure list is always there. You can do your own due diligence on the properties. You can, uh, visit the property, check out, what's the damage, what needs to be fixed, who is living there, it's a tenant or the owner. You can also check out, the legal paper, the title details, wherever possible. And on the auction date, you need to carry bank checks. You know,
Cashier's
they
check.
don't, yeah, cashier's checks. They don't take personal check or cash normally.
Right.
So you need to have a bank checks. Um, some of the uh, some of the counties, they want you to register those checks. You register their names before you can get into the auction room. Uh, the other places, they will just let you in the auction room and you can just start bidding on the property as it comes. Uh, Once you win the bid, you'll have to submit 20% of the winning amount uh, on that day. And within 30 days, you have to do the payment for the rest of the 80%.
Got it. So you have 30 days
Yeah. So
to
20% on the same day, 80% within 30 days.
and
And
let's
it's all
say,
cash.
oh wow, okay. And let's say for some reason you are not able to get the 80%, or you don't like the property anymore. Is there a way out?
So there are, if there is some damage, something wrong with the property, like environmental issues, right? You can always go back and vacate the sale, which is, you have to appeal in the court to vacate the sale and get your 20% back. There might be some other title issues which weren't clarified
Disclosed.
during this or disclosed during the auction. Okay. If you find some title issues later on after you have won the bid, then also you can go and vacate the sale.
Got it.
Yeah.
So,
But
so
if
there
there
is
is no
still way
issue to
out.
the property and you don't want it, you think like you have overbid on it, then it's very hard to get out. You have to buy it or you have to let your 20% go.
Okay. Yeah, because sometimes it's better to let that 20% go. If it's not significant, right?
Yeah.
Then take over a headache, right? Once you figure out that this may not be the, you know, food you want to chew,
Yeah.
right?
Yeah, you have to evaluate, right? If it is a how much loss you want to take. You want to take 20% or take on the property and take more loss than that.
Oh, yeah,
And it's also time, right? It takes
exactly.
time.
That's where I
That
was
that's the other
going.
thing.
That if you are you going to spend a year and then maybe barely break even, then is
Yeah.
it worth your time and effort, right? And the headache
Hmm.
you're
And
going
the
to
headache,
take on.
exactly. Yeah.
So let's talk about when you are looking at this kind of properties, foreclosure, short sale. What kind of underwriting should one do?
Okay. In the underwriting, two things, right? First is, what is your goal? Like, what kind of properties you are targeting? Are you targeting single family homes or targeting properties for fix and flips? So that underwriting would be separate. If you're targeting to keep use or buy a property as an investment property, use it for the long term, that underwriting would be separate. So what we do is, any property that we buy, right, we check out the cash flow. If the cash flow makes sense after it is renovated and brought it up to the current market rent, if the cash flow makes sense, we keep it for ourselves. Like, we do use this Burr method, keep it for ourselves for long term. uh,
Right.
yep. And if the cash flow versus the profit, okay, we evaluate the cash flow versus the profit, one time profit, if I have to sell it out. So if I'm getting a really good amount of profit, I'll just sell it right there. Yeah. So it's all about, in the underwriting process, we take care about the future rent after the renovation. Um, we take into account what is the current market price if I'm going to sell it right now. Some of the time, what happens is, if I buy a property, I even before I touch the property for or do any renovation, there is some other buyer who wants to get it from me. Then I'll just assign the contract to him, get my 25, 30,000, whatever I can, and just, part away with the property if it doesn't make sense to me.
Right. Okay. No, that makes sense. And this is so complicated overall, right? Because you got to do underwriting, you have to perform due diligence little differently. Are there
Yeah.
any gotchas while buying properties under foreclosure?
Yes, first, as I said, right, you always have to, if you're done your own online research, or like checking, what are the mortgages on the properties, if there are any liens on the property. After you've done your online research, I would always say visit the property, check out inside out of the property. If needed, check out who is staying in the property. Is it the tenant? Is it the landlord?
Yeah.
Okay, because that also, I'll tell you, that also plays a good important role, when you have to do a
Yes.
fix or flip, or uh, the other thing is, uh, you have to sometimes check with the town about there is no illegal construction on the property. I learned that a hard way.
Ah,
But yeah, sometimes there might be some illegal construction you have visited. There are three families, but only two is legal. So you might come across those kind of scenarios also, which I have one before. Uh, yep.
so you mentioned about tenant or landlord. I think that's very important because a lot of time the tenant may not have been paying the rent, right? That may be the reason that they had to foreclose because the landlord is not able to cover their mortgage payment, right? And they may be living there for free. So that could be
Yep.
another issue you may run into, right? Because now you have to figure out, and if you are in states like ours, New Jersey and California, where they are tenant friendly, right? It's very
Yeah,
hard to just evict the tenant, right? So that's another
yeah,
headache you are going to take over, right? And
exactly.
the one question I had was, do they allow you to look at the property inside out while it's in foreclosure, or while it's it's in at sheriff for auction?
Normally, there you can only go outside. You can view it from
Right.
outside normally. But if sometimes what happens is property is abandoned. Some of the property that
I
comes
see.
in, so that in that case, you can always uh, look from inside also.
Got it. Okay, yeah,
Yeah,
when it's abandoned. And
yeah.
have you had to deal with an issue where it was, a tenant was living there and you had to figure out how to, get them out?
No, most of the times it happens. All right. If yeah, if the tenant is there, if they're not paying uh, the market rent, or if you have underwritten that property for a fix and flip. All right. So if you are doing a fix and flip, you want the tenant out. So it's like cash for keys. You have to pay something,
Yes.
uh, you know, to get them out.
Yeah, and that's where
Yeah.
I was going, that yes, you
Mhm.
got to do cash for keys and somehow get them out, right?
Yeah.
Is there
And
anything? Go ahead.
if it is owner, it's a lot easier.
Right.
Okay, because then you can just file an eviction notice on him and you can get them out. But for tenants, if they have a long lease, it
Yes.
might be, if they don't agree to get out, you cannot do nothing. You know.
Right.
So, yeah.
Is there anything else you want to share about foreclosure, something from your experience or something which you have seen and we did not discuss?
From so one of the case I'll say, when you asked me the question, was there any gotcha moment for
Yes.
in the photo? So I'll give you one scenario where I really got stuck with one deal.
Hmm.
All right. I had taken a look at that property, went from outside. I figured out it is a 3-unit property, 3 tenants staying there. And I bid on the property based on my numbers that uh, that were for 3-family house, 3-family, And after I won the bid, I closed on the property. Later, I got to know that the third unit, which was built in the backyard, it was a 2-unit in the front and third unit was in the backyard.
Right.
The third unit that was built in the backyard was illegal. And I had got a notice from the town. I got to tear that down.
Oh, wow.
Yep. So that was one of my, real gotcha moment, as you said. And something to always check with the town on if everything on the property is legal or not.
Right.
Yeah.
Oh, that makes sense. Let's talk about your deals. What has been your best deal so far?
Okay. The best deal back in 2017, I had bought one multifamily property here in New Jersey. I bought it for 260, to a 2-family unit. And after buying the property, I saw like the lot was pretty big. Okay. Compared to the other adjacent lot in the neighborhood. Went to the town to check what are the codes, what if I need a variance to divide the lot. But everything was, everything fall in the right place for me, actually.
Yeah.
The town did give me an approval to divide the lot into two. So on one lot, I had this 2-family unit. The other was a vacant lot that I was able to, do a subdivision on it. And I was able to, once everything was done, I was able to sell that lot for 200K.
Oh,
So
nice.
almost like I bought this property for 260,
Oh,
sold the lot
wow.
for 200. I still have that property.
Yeah. That's pretty much
So
paid for now by this
it's
time with
paid
the
for.
rent and everything, right?
Yeah.
Yeah.
Yeah. So that was,
That's good.
I would say, one of my, best return on investment, I would say.
Oh, that's great. So let's talk about the other side. Let's talk about your worst deal, where you may have lost money or your hair.
Yeah, the worst deal we just talked about, right?
Right,
Where
the illegal.
yeah, there was an illegal unit built behind in the backyard. That was one of my worst deal, I would say, because well, after I had to tear apart that
So you had to tear it
unit that,
down.
yeah, I
Okay,
had
no
to tear.
choice.
I didn't have no choice. I had to tear it down, so that cost me money. On top of that, I had bid based on the
The
assumption
numbers.
this is a 3 unit. Now
Right,
it's a 2 unit. So the price just went down 150K right there.
right.
So just 20-30,000 to tear it apart, everything clean up, 150,000 cost goes down. So right there, I mean, like 200K loss.
Wow. So
Yeah.
what did you do with the property then?
We flipped it.
Oh, you flipped
We
it.
flipped it. Yeah.
Okay.
Yeah.
No, not what keeping it.
Mhm.
That makes sense. Thank
Yeah.
you
I, di-
so
I
much.
didn't I didn't want to keep the bad memories.
Right. Move on, right? No, that's
Yeah.
great.
Yeah.
Thank you so much for sharing all your experience regarding how to buy foreclosure properties. Are you ready for fire round?
Sure, I'm ready. Yeah.
Would you be changing any business or investment strategy because of recession or inflation?
Yes. Right now, for the large multifamilies, we have stepped back. We haven't been underwriting. We are looking at the numbers, but it's not making sense right now. So we are just, holding back, waiting for the dust to settle. Uh, and any of the underwriting that we do for the large multifamilies, we always make sure we take into account the interest rate hike that is going to take place in the future.
Right.
So if there is a 25 basis point or 50 basis point that is expected in the future, we take that into account uh, during the underwriting. And when we take into account those things, you know, the you are going to get outbid by someone who hasn't taken that into account.
Right.
They're allowed to outbid you by 1 million or two.
Right. Right. The
Yeah.
markets.
And so for now, we are just wait and watch on large multifamilies. But I'm focusing more on single family luxury homes right now in New Jersey. It's doing good. So that's where my focus is as of today.
That's great. Favorite investment, real estate, or business book?
Uh, I would say The One Thing.
Yes, that's a
Uh,
great book.
it just gives you a very good perspective on how you should plan your day, your goals, because it's like, as you know, the 80-20 rule.
Yes.
Um, when 20% of the job, will help you to achieve your goal.
Yeah, will
So
help you achieve your 80% of your goal. Yeah.
80%. Yep,
Yeah.
exactly. So it does give a pretty good guidance on how you should focus on targeting your, work goals. I like that book pretty much.
That's a
Yeah.
great book. Any tool or website you recommend or you cannot live without?
One work related or is Asana.
Yes.
It's a good tool to
Project management.
yes, for project management, and assign the work and keep a traced have a traceability matrix out of it. It's pretty good, Asana.
I agree. Any advice for beginner investors?
Beginner investors, okay. Do your research, but don't get into analysis paralysis stage. Take action. Do your research, but take action. Don't wait. Or maybe, if you know someone, uh, partner with them, use their knowledge and experience, and invest with them.
Right. No, I agree. Totally agree. How do you give back?
So giving back, normally, like you, I also, am a migrant from India, and you are also well aware, right? There are so many children in India, not many places other in the world too, but because India is very close to me, uh, there are so many children in India who doesn't get a basic education.
Right. Yeah.
So what I have done is take a portion of my income to support the educational needs of those children who are not fortunate enough like us to get a higher education or a better education. So I divert portion of my income to that purpose.
That's awesome. Oh, this is great. How can my listeners reach out to you?
They can go on my website, astracapital.com, and they can always reach out directly to me at ted@astracapital.com. I'll be, ready to take a call anytime from them. I'm always open. If they have any questions, comments, they can always reach out to me anytime.
That's awesome. I appreciate you taking time out of your busy schedule. Thank you, brother.
Thanks a lot. Thanks for having me on the show.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!